Hi guys, good afternoon and welcome to the CNBC-TV18 Mumbai newsroom. I'm Pavitra Parekh. You're tuned into your stocks and this is not looking like a good day for the markets. After staging that big recovery around lunch hour, we have seen a slip back right now and we are seeing around a 0.5% cut on the Nifty. So we've seen a significant drop again from that flat line. The mid-cap index continues to underperform, something that we've seen all of today. In fact, right now it is seeing a cut of 1.5%, and that is where a lot of pain is coming through. The banking index also is down around 0.6%, and most of the cuts here are from the PSU banking space. Of course, that entire space has rallied and rallied hard, but today it is what is seeing a lot in terms of cuts. So that's what's going on with the market action. We'll talk about that in just a bit, but first up, let me invite our guests on the show. We have Astha Jain from Hem Securities as well as Ruchit Jain from 5paisa.com to answer all of your stock-related queries. Astha, Ruchit, thank you very much for joining us and taking out the time to take our viewers through all of the queries that they have sent in. And we have a whole lot coming through. So let me get right to it. Nagendra calls us from Bangalore with a query. He has investments in Karnataka Bank as well as HUDCO. And in fact, he's on the line with us. Sir, if you can hear me, please do go ahead with your query. Both of our guests are on the line as well.
Yeah. Hi, Pavitra and everyone. Good afternoon. I'm Nagendra from Bangalore. So my question is, I have Karnataka Bank of 800 shares, which is bought at 102.58 average price.
Yeah.
I just want to know, do I need to exit at current price or do I need to wait? That is my first question. And second question is, I have HUDCO.
Yes.
Quantity of 5,500, bought at 68.39 is the average price.
Okay.
I just want to know, should I hold or exit, because this stock is not performing well for quite some time.
Yeah. Okay, let's ask both of our guests that. Can I ask you how long you're willing to hold these? Are you a long-term investor?
Yeah, I'm a long-term investor. I have been holding these two stocks for more than 5 years from now.
And you're comfortable holding them for a few more years as well?
Yeah, sure. Correct.
All right, let's ask our guests what they think. I'm going to go across to Astha first. Astha, what do you think? Karnataka Bank, of course, this one has been rallying really well and it's clocked in some good gains. But do you think that there's lots more room for upside here?
Hi, Pavitra. Good afternoon. Yes, I think there is a room for upside here. So Karnataka Bank is a hold from my side. I think the possible price targets can be at around 150 or 155 level. So if I talk about the bank as a fundamental, this bank has posted the highest ever profit of around 412 crore in this quarter. And in fact, whatever management has guided, they are guiding the credit growth of around 30%, which seems to be very decent. In fact, they are guiding some improvement in their asset quality also. So I think all in all, going forward also, this bank can post very strong set of numbers on the basis of whatever management has guided right now. So I think this bank has a potential to move further upside from here, and hence I'm recommending hold with a price target of around 150 to 155. Talking about HUDCO, HUDCO is also looking decent right now because the results were good. In fact, this company has got the highest ever, credit rating agencies have given a highest rating of AAA. So this is again working positive for this company. In fact, they have seen a sharp fall in the cost of funds. In fact, their NIMs have also risen in this quarter. They have posted the NIM of around 3.3%, which was in the last quarter or last year was 3.27 only. And in fact, the debt to equity ratio has also come down. It is at around 3.7%. as against 4.26% on year-on basis. So all in all, HUDCO is also looking decent right now, and hence I'm recommending to hold HUDCO also. Price target can be set at around ₹70, 75.
All right, so it's a hold from you for both of these stocks. That's Karnataka Bank as well as HUDCO. Ruchit, let me come to you as well. I'm sure Karnataka Bank has been an exciting chart for you to track. So, take us through what you think is the way forward. Do you see a lot more room in terms of an upside over here, and as well for HUDCO, because I can understand that, ever since our viewer has bought this, it's not performed too well in that time period.
Yes, hi, very good afternoon, Pavitra. I think I would have same recommendation to continue to hold on both the stocks since he has a long-term view on the stock. Karnataka Bank specifically, we witnessed many such mid-sized banks witnessing good price volume action in last 2 or 3 months. Similarly, Karnataka Bank has also witnessed a good volumes along with the price up move, and since the stock is trading around its highs. So, usually in technical analysis, we come out with reciprocal retracements, which gives us a target projections, and the retracement theory is projecting targets around 215. So I think around that 210, 215, he can look to take a review again from a mid to long term perspective. So for now, continue to hold on. He might see some short-term corrections, but I think since he's comfortable holding for next 4 to 5 years, my call will be to continue to hold. Hudco, although I think he bought at high levels, but if you look at last 2 or 3 months, again the price up move in Hudco 2 has been supported by good volumes, which indicates a good buying interest in the stock. So what would happen in short-term corrections, which if comes again in the stock towards that 45, 48, I think the stock would again witness a good buying interest. So mid to long-term trend has changed for the stock of late, and you can expect targets around 68 to 70, where again he can take a review on this.
All right, so it is a hold from both of our guests on Karnataka Bank as well as Hudco. Nagendra, I hope that helps you with your queries. And, considering the fact that you have a 4-5 year time horizon, these are perhaps good bets. That's the call coming in from our guests today on the show. But the next query comes in from Gopal Krishna. He writes to us from Cochin. He holds 30 shares of Tata Investment Corporation bought at 1,518 rupees a share. He says he's a medium-term investor and wants to know whether he should hold or he should book profits on this one. Ruchit, I'm going to come to you on this Tata investment. He has made good returns already. Do you think it's a good time to get out and book profits here?
I think yes, he can look to book some profits at current levels. Ideally, we have seen a good price up move, but no, since the month of September, the stock has entered some time-wise corrective phase, and major support for the stock is coming around its 200 DMA, which would be 1870. So it won't be a bad idea since it's in good profits. I think he can look to book profits at current positions, and in case he wants to re-enter from a medium-term perspective, then early 1850, 1860 should be good levels to re-enter into the name.
All right, got it. That is the call coming in on Tata Investment. The next query comes in from Vikram Shenoy, writes to us from Mumbai. He says he has 150 shares of Bajaj Finance at 5,500 per share. He is a medium-term investor again, and he wants to know what he should do. Should he hold or exit? And he's also asking, should he, instead of Bajaj Finance, choose stocks like ICICI Bank or SBI? Astha, let me come to you on this one because, normally when we talk about Bajaj Finance, it's considered one of those evergreen stocks. But he's also asking, should he move to ICICI Bank or SBI? He has a medium-term time horizon.
He need to shift his folio from the Bajaj Finance to ICICI Bank or SBI, although if he want, he can make fresh entry in those counters because markets are already seeing some sort of profit booking. So I think he'll get the better chances to buy those counters at the lower level. But talking about Bajaj Finance, I think the stock has a potential to move up upwards from here, and the price target can be set at around 70 to 100. So for Bajaj Finance, I'm positive because whatever results they have posted was the strong results because in their AUM, they have shown the growth of around 30%. In fact, their asset quality has also improved because GNP and NPA ratios have shown significant improvement. So all in all, and in fact, whatever the new loan which the company has booked has also risen by 7%. So I think Bajaj Finance in itself is a strong story. So there is no need to shift from this counter. Although if I think some sort of downfall can be seen, if some sort of downfall will be there, then definitely there is a good opportunity to buy ICICI Bank and SBI. But I want him to hold Bajaj Finance also.
Yeah, I cannot remember the last time anyone on this show came and said that, you should get rid of your Bajaj Finance shares. So let's ask Ruchit that. Ruchit, do you think this one is a good one to hold on to and you don't want to get rid of your positions here?
So, Pavitra, even I would not say to exit from Bajaj Finance as well, like other analysts.
Yeah. So,
primarily, even technically, the trend is not negative yet, although we have seen some correction in last few weeks, but this just seemed to be a short-term correction within a longer-term uptrend. So I don't think if he has a view of about next 2 years, he needs to worry about that. So primarily he can expect targets again towards 8,000, 8,400 in next 2 years in Bajaj Finance. So you can continue to hold on to Bajaj Finance. ICICI Bank, SBI, both are good from a mid to long term perspective. So if he wants to add some fresh positions or new investment if he wish to do, then he can look to add the positions in ICICI and SBI.
Okay, got that. So that is the view coming in on Bajaj Finance as well as a few of these large banks like of ICICI as well as SBI. But moving on, we have another query. This is from Jamshed Sukharwala, who calls us from Mumbai with a query. He has investments in Zydus Life Sciences and he's actually on the line with us. Mr. Sukharwala, please go ahead, ask us your query. Both of our guests are on the line, so we can get you a complete fundamental as well as technical response to your query.
Thank you very much. I am holding Zydus Life Sciences, 300 shares at 590 per share. At present, it is quoted at about 410. I intend to sell this at a loss and buy Adani Power about 400 at 315, which is the current price. Now, Pharma has been now in a little low, what can I say,
no, I understand. You bought it at 590. The stock has corrected sharply from there. But can you tell us for how long you're willing to hold on to this investment?
I would like to hold on. I'm an investor and not a trader, so I could hold on. But what is the opinion about Zydus? And if I change over, will I be able to make up my losses?
Okay. Let's ask our guest that question. Astha, coming to you on this one. Your thoughts on Zydus, because I can understand why our caller today is nervous about it. It has seen a sharp downtick. He bought it at 590. It's currently closer to 410. So your call on Zydus, do you think he can recover his losses here? And do you think Adani Power is a good bet instead?
So because both these counters are from the separate sectors, so I think there is no comparison. And in fact, if I talk about Adani Power also, the stock has not shown very strong financial performance in the quarter gone by because they have a very high element of other income. And if I exclude that other income from the quarterly results which they have posted, then again it is sort of a loss which this company has posted. So Adani Power is also not looking so strong fundamentally right now. So I don't think that he should book some losses in the Zydus and get into another, a weaker performer. So it's better stay invested in the Zydus, because although the results this company has posted, and in fact even I do agree that pharma sector is not performing so strongly, but I think going ahead there are certain positives with this company, because recently they have got this US FDA approval to market Silodosin as well as Pregabalin. So if I talk about this Pregabalin, it has a very strong market share in the US. They have the very strong market share. Very strong market, and Pregabalin is basically used to treat diabetes, etc. So I think going ahead, maybe whatever approval they have got, they can work in the favor of a company, and company might be able to show some sort of strong financial performance. So all in all, I think it's better to stay invested in the Zydus Life rather than book loss and going into Adani Power.
Okay, stay invested in Zydus Life Sciences, and perhaps Adani is not the best bet right now. Ruchit, do you agree with Astha on this one? Do you think that sticking to Zydus is a good option? And also separately, take us through your thoughts on Adani as well, Adani Power that is.
Yes, I think I'll continue to hold Zydus Life Sciences as of now. 390 has been a good support for the stock recently. So he can keep that as a stop loss. But in case even if he wants to make a shift, then I think Adani Power may not be a good idea to recover the losses, if he books any losses from Zydus Life Sciences, because we have not seen a very strong price volume action not recently in Adani Power. So unless we see a resumption of the uptrend where the up moves are supported by good volumes, I think one should tend to avoid Adani Power. So rather, I would even give an alternative from the NBFC space. I think L&T Finance Holdings should be a good idea to switch on to if he is looking to make a switch at all, because L&T Finance Holdings of late have seen a good impulsive price action, good volumes are there. Recently, I think the promoters have also hiked the stakes a few months ago. So I think over medium to long term, I think the stock should do well, and he may look to recover losses from there.
All right, thanks for that. So I'm sure this will help our caller, with his query. I think both of our guests agreeing that perhaps it's better to hold on to Zydus, and Adani Power is definitely not the correct switch right now. We're going to get into a short break now, but Astha, Ruchit, I request you to please stay on, because we have lots more queries that we're going to get to in just 2 minutes from now. Hi, welcome back. You're still tuned into Your Stocks on CNBC TV18, and we still have Astha Jain as well as Ruchit Jain with us to answer all of your stock-related queries. So let's get back to those. Vishal Rai Singhani writes to us from Ahmedabad. He says he has 50 shares of InfoEdge at 42.79 a piece and 70 shares of Clean Science Tech at 1742. He says that he's a long-term investor and he wants to know what he should do with both of these positions. Ruchit, what do you think of both of these stocks? I mean, he is seeing a loss in both of these, but do you think there's a chance that he could make this up?
I think as InfoEdge should be held on. We have already seen a good corrective action since last few months, and I think somewhere the price-wise corrective phase has been over as it corrected from that October 2021 highs till May 2022. And if you look at the price action after May, and it has been more of a time-wise correction or consolidation phase which is going on. So as of now, it is holding on above its long-term supports, which are around 3,500. So till those are intact, so it's better to hold on to InfoEdge. Clean Science, I think, since we have seen some underperformance of late, in spite of the mid-cap stocks or mid-cap index showing a good up move. The mid-cap and small-cap names, some of the mid-cap and small-cap names have not performed. And I think those who have shown an underperformance in last 4 or 5 months, it's better to get out of those names and look for some better alternatives. So I would advise to have a sell-on-rise approach for Clean Science. 1650, 1700 positionally would be a good level where in case if we get the stock, then you should look to exit from this one.
Okay, so hold on to InfoEdge, but Clean Science, perhaps you can exit when you get a slightly better position on it. This stock is actually seen quite a knock, 40% down this year, and it is below its listing price as well, which was closer to around 1630. Asa, what do you think of both of these? Clean Science, which, like we were just pointing out, it has seen quite a knock, and InfoEdge as well. But InfoEdge is, an industry-wide thing that we are seeing.
Yes, so in fact, for InfoEdge also, my stance is stay invested because I think the price target can be set at around 4,600 for this counter. If I talk about InfoEdge, I mean, all of their platforms are working well, whether it is, Naukri.com or it is, 99 acres. So their recruitment as well as their 99 acres platform are working well, and they have shown some sort of single-digit growth on the quarterly basis. What is not working well for the company is the, matrimony thing. And I think for that, the company has set up a complete new strategy. They are resetting their marketing strategy in which more customer engagements can be seen in the longer run. So I think in the longer run also, InfoEdge can prove to be a better investment avenue because I think they will continue to post strong set of numbers. So my stance is hold InfoEdge. Price target can be set at around rupees 4,600. Talking about Clean Science, I think Clean Science has a potential to move upwards till the level of 1680 or 1700, which even the Ruchit has also mentioned. Because what happened, although why this company was not able to perform well because their results were not good, especially if I talk about the margins were not very high because of the contribution of lower margin products in their revenue. But going forward, they have the plan to launch new products in which one of the product, that is HAL, hindered amine light stabilizer. This is the product they are planning to launch, which is a strong, in the US, they have a strong market of around $1.25 billion. So this company is planning to launch this product, and in that also they have attributed the 3 billion capex also. So all in all, Clean Science can be a longer term story. So if he has a patience to hold it for the longer term of around 1 year or more, then stay invested in the Clean Science also. But if not, then also wait for some time. Maybe he'll can exit his position at around 1680 or 1700 level, as Ruchit has mentioned.
Okay, got that. That is the view coming in on InfoEdge as well as Clean Science. I'm going to try to fit in one last query. This one comes in from Nitin Jain. He writes to us from Pune. He has 15 shares of Coforge, but I think he bought around 4,105. He is a medium-term investor and he wants to know what he should do. Asa, coming to you on this one, this stock, of course, has not done well, but of course, IT has not done well. And I think the highs for this were closer to 6,000. Do you think that for a medium-term investor, this is something that he can aspire for?
I think he can, and that's why I recommend him to hold. I think in this we can see the levels of around 4600 or so in the coming future. Maybe not immediately, because the results they were posted and mostly in line. In fact, their order pipeline is very strong, and in fact, the attrition rate which we used to always watch for these IT companies, so it is one of the lowest in the industry at 16.4%, in which even they have shown some sort of downfall also in this quarter. So all in all, I mean, on the back of strong order pipeline, low attrition rates, I think this company can be a hold. And if everything goes well on the macro front, then stock has the potential to move till the level of 4600.
All right, that is the call on Coforge. You can continue to hold this one. Ruchit, would you agree? Coforge is good to continue holding for a while. He is a medium-term investor, so he can at least hold for a couple of years.
So I think yes, then should continue to hold on, but I would also provide a stop loss for the same, because of late we have seen a lot of volatility in many of the IT names, where I think the momentum is getting more dependent on how the Nasdaq is moving over there. So if I look purely at Coforge charts, then 3740 is a very good support for the stock. Till it is holding on about 3740, the trend would continue to remain sideways to positive. And in case if 3740 breaks, then I think another leg of price-wise correction could be seen. So keep a stop loss below 3740 and continue to ride this trend.
Okay, got that. That is on Coforge. And with that, Ruchit as well as Asa, I'm going to thank you. Thank you very much for taking out the time and speaking to us about all of these queries that we have coming in. For the markets, we have seen the losses only widen in the past half an hour that we have been talking. The Nifty has slipped back below the 18,300 mark. So it's a near 0.7% in terms of a cut. The losses on the mid-cap index also continue to widen. 1.7% gone on the mid-cap index. And Reliance is the one which has seen quite a slip. It is at the low point of the day and has moved into the red. But on that note, we're going to wind down on this edition of Your Stocks. Remember, you can always email us your queries and we will take them up with our experts. Stay tuned. Closing bell comes up for what is looking like a very interesting last hour of trade.